You have to look at the Chinese currency in the context of all other currencies. Over the last few years, the yuan has appreciated against the dollar, and the dollar has appreciated against just about anything in the world. And we have had, say, since 2011, the Brazilian real depreciating by 60%, the Turkish lira by more than 50%, and so forth. And all the other Asian currencies, with the exception of the Hong Kong dollar, have been weak over the last 12 months. And the Chinese yuan has appreciated by 80% over the last 2 years against the yen. So, starting about 9 months ago, the yuan stopped appreciating against the US dollar and formed kind of a bottom against the US dollar. And now it's starting to weaken against the US dollar. And I think this weakness will spread. I think it's quite obvious, even to the greatest optimists about China, that the economy is not doing well at the present time. I mean, there are so many indicators that show that something is not going well. In July, car sales were down around 7%. And luxury goods manufacturers all complain. Commodity markets, industrial commodities, have collapsed over the last 2 or 3 years. You think they collapsed because sudden huge supplies or because of a diminished demand, appetite for industrial commodities? So Chinese economy is actually much weaker than the consensus believes. I maintained a year ago that if China grows by 4%, they'd be lucky. I think right now, the economy is probably not growing at all, maybe 2%.
So where's the 7% figure coming from? Is this just
the government?
Opaqueness.
From the government. Have you ever seen a government that doesn't lie? I haven't.
well, there you go. So there's no transparency in the numbers, is there really? I mean, from what we're looking at.
What transparency is there in the numbers in the US? You believe the inflation figures they publish, or what the real cost of living increases are?
So if you believe that China's economy is basically flatlining right now and is not sitting at 7%, is in fact sitting at 0 or 1 or 2, where's the US in comparison to that?
Well, we had huge stimulus in the US, and we have large capital inflows into the US. And we had a strengthening property market. The high end is doing very well in the US. The financial sector is doing well because, as you can see, bonds are at essentially close to record highs. In other words, yields are close to record lows. Stock market is close to a record high. And so part of the economy, the New York economy is doing quite well. The high end is doing quite well. Newport Beach is doing well. The high-tech belt around San Francisco, Palo Alto is doing well and so forth. But the median household is suffering from continuous, still heavy debts. And number 2, from affordability. The problem with supporting asset markets, as the Fed and other central banks are doing, is that for most people who finish universities, they can't afford to buy these goods. They just can't afford. That's why do suddenly people live with their parents at home in the US? You think because of choice or because they can't afford to rent? The rents in the US have gone up very significantly.